Hey folks, welcome back to another challenge update where I'm trying to make $10,000 in a year, and so far it's been 13 weeks and things are not going so well. Alphabet is down again by $2 per share last week, which means I lost about $600, taking my total loss to 1,500 Canadian dollars. But the silver lining to all this is the lower the stock price drops to, the higher the potential return is going forward, because nothing has fundamentally changed about the business. So any decline in price is just an opportunity to buy the stock at a better bargain. So as of last week, I'm right here where this blue line ends, and I'm trying to get to this yellow line up here. So that is quite the gap there. So here's what happened last week. This red candle here was a Monday, and I mentioned that there are essentially two channels here. The yellow bear channel going down here. Google broke out of that, and usually that means we're going to get a retest of the bottom, which is right around here, which also corresponds to this yellow circle that I drew last week. And at the same time, we're following this newer blue channel going sort of horizontally, chopping up and down. So that's why I sold my short calls at 103 and I sold a put at 95, which means by the end of the week, which is this blue dotted line here, I expect the stock to finish within this range. So several days later, this is what we get. On Tuesday, the stock dropped. It didn't quite touch the intersection between these two channels, but it did come down on Thursday to test the low point back in late September. That was when CPI data came out, where the stock market started off really low, but there was a huge reversal, and we see this massive green candle pushing upwards. And then on Friday, it was down. But overall, it was a successful trade. The stock ended in between my two target strike prices, which means the options expired out of the money, and I was able to make $239. So what about today? It's a new week, October 17th, and let's try to figure out where Google might end up on Friday, the 21st. So here's a real-time look at Alphabet shares today. You can see that big red candle was last Friday. So I'm going to move this blue vertical line over to the 21st. That would mark the end of this week. So today is quite bullish, especially if we can end the day above this blue 21-day EMA. I think this bear channel here is not in play anymore. It basically broke, so I'm going to get rid of that. This blue channel is still very much being respected, so I'm going to extend this out to at least this week. And this seems to be the new range that we are trading in. So I think I'll still sell my puts at $95. Next week, as you see here, is earnings. So I might trade a little bit differently, but for this week, I don't expect any big moves either up or down. The stock is trading at $100 right now, which is 3.5% above Friday's close, which is pretty good. So I would expect my returns this week to jump back into the positive zone. So for my call option, I think 103 is a little too close to the current price. I mean, if we have another good day where it goes up $3, then I'm already in the money, and I don't want to be leaving that much money on the table, because if it jumps to like 105 or 106, then that's a lot of missed opportunity to cash in on capital gains. So I might raise this up to, there's really no resistance above the 103 level or the 102 level around here. Because after this point, we have to go back to July, it looks like, because from July going back all the way till like May, we see some key support levels there where the stock bounced up after it dropped to those levels. But now, since we are below those summer prices, I would expect those to be resistances. So there's a couple of full day closes above this line right here, which is around the $105 level. So I might make my call option something like 106 maybe. That should give me a pretty reasonable margin of safety. That's like an $11 spread between the two, because I do want to play it relatively conservative this week before earnings next week. So I'm going to open up the option chain here for Alphabet, expiring October 21st. The 95 strike, I'm going to do the put option side first. It is one standard deviation, so that's pretty good. I basically don't want to sell any options in this dark blue area because that would be too risky of expiring in the money. So I will sell this $95 strike, make about $51 for that. And I'm going to sell another put option at 90. This is 2.1 standard deviations with only a 4.4% probability of expiring in the money. I don't expect the price to drop that low, especially if it's like $100 today. So I think that 11 cents is worth taking that risk. So I'll probably sell one 95 put and then two 90 puts. And then on the call side, I was looking at the 106 and it looks like I can make about $26 from this option. So I'm going to select that and put in my numbers. So I'll sell two of those and I will sell three of these. That should give me about $200 Canadian in premiums. Let's find out. I'm going to go with the slightly above the mid price here of 148 and submit my order. Let's drop this down to 143. Okay, so it's been about 15-20 minutes later, but the option did fill. I did change the $90 put to a $91 put just to make a little bit more premium from that, but ultimately the entire strategy paid out $137. So most likely Alphabet will end the week somewhere between these two strike prices, between 95 and 106. We'll have to see what happens. And then next week is going to be very interesting because we're going to have earnings. And I think that's when I will be using some vertical spreads to potentially make some extra premiums. So thanks for tuning in, and I'll talk to you in the next one.